Hey, this is Matt from InvestiQuant. Today is Wednesday, August 23, 2023. Today, after the close, we're going to be hosting an Auto Trading with IQ webinar. And if you would like to join us, there's a link below this video where you can sign up. That'll be today at 4:30 p.m. Eastern Time. And even if you can't show up live, if you sign up, you will get a copy of the recording. So if you're interested in auto trading, go ahead and sign up, and hopefully we will see you after the close. For today's Daily IQ, we're going to be looking at a pattern that took place yesterday. Yesterday was a narrow range session, narrow range 4, narrow range 7, all of those qualified for yesterday, even though it did seem like it was a little bit more range than what we've had over the past couple months or so. But relative to recent trading sessions, it was the narrowest of the past 4 sessions, and it's taken place in a bit of a weaker market, which is not typically what you think of when you think of narrow range patterns. So we're going to take a look at this and see what's happened historically following it. I've got all 4 instruments selected. Our setup's based upon entering long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, currently the market's trading higher in the overnight session, so within the opening filters library, I've clicked on Gap Up. Next thing I want to do is describe yesterday's price pattern. I'm going to use 2 pieces of information from the price patterns library. The first one is going to be the NR4. I said it was an NR7 as well, but I'm going to go with 4 to try to keep a few more samples here, because I'm going to do that, and I'm going to say that it closed weak because it was a little bit volatile. So I'm going to say it closed in the bottom 25% of its daily range. I just grabbed that from the active today right here. So I've got 2 different price patterns put in here. The next thing I'm going to do is put us in a similar market environment. Yesterday closed below a 10 but above a 200-day simple moving average. I've added both of those, and now I can click View Results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when you were gapping up following a narrow range 4-day that closed in the bottom quartile of its daily range in a weak bull market. Historically, we've got 29 samples here in the S&P, 34 in the NASDAQ, 35 in the Dow, 38 in the Russell. Win rates on these coming in a bit favored everywhere. S&P, 66% of those have closed above the opening print. It's 56 for the NASDAQ, 74% for the Dow, 55% for the Russell. If we look at the average moves, average move to the upside larger than the average move to the downside in the S&P. That's also the case in the NASDAQ. For the Dow, the average move on the downside has been larger, and that's the case as well for the Russell. So split on the average moves, but all 4 of them have win rates that have historically favored a close above the opening print, with the Dow being the strongest at 74%. Dow would be that green equity curve, and looks like there is an outlier taking place around here. Yes, right here, that's the S&P. That one looks a little bit smoother in terms of consistency there. Anyway, hopefully you found that helpful. Again, that webinar link will be underneath the video. You can join us this afternoon if you're available. We'd love to see you.